In this video, I'm going to show you guys exactly step by step the 3-step process that you guys need to follow when using a trend following strategy, also in confluence with smart money concepts. Okay, so number one is direction. Okay, so number one here, direction. We need a directional bias in the market in order to know whether we're looking for long trades or short trades. Okay, so looking at this market here, bearing in mind this is USD CAD on the 5-minute time frame. However, this schematic and this process can be used across all asset classes, whether it's Forex, crypto, stocks. Market structure is market structure at the end of the day. Okay, so directional bias, number one. Okay, so clearly we've had a strong break to the upside. Okay, and the reason this is strong is because if you look at these candles here, clearly we've had 5 consecutive candles in a row showing bullish momentum. Okay, these are all bullish candles. There's no bearish momentum within this move. Okay, so we've broke strongly to the upside. We can mark this on as a BOS to the upside, a break of structure. Okay, after we've marked on a break of structure, we understand our direction. We have a long bias. Okay, so that's number one ticked off. Very simple. What's the bias? What's the direction? Clearly this is a long trade. We're looking for long setups. We're breaking to the upside. Okay, number two, our entry point of interest. Okay, so where is our point of interest? Where are we looking to get long on this market? It's very simple. We have an extreme supply at this order block. Okay, and this order block, we mark on our extreme supply from the open of the candle down to the wick, down to the low. Okay, this is our point of interest. It's that simple. Okay, we can then mark on our guarded low. Our guarded low is our invalidation level. Okay, so GL, guarded low. We don't want to see price come back and close below our guarded low. Okay, so what we're looking for is price to come back into our point of interest. Within this area, we're then going to look for our entry schematic. Okay, so our entry schematic. So once we see price come back into this area, what are we going to look for? Well, we want to see a shift in market structure on the lower time frame. And what do I mean by that? Okay, so if we see price come in here, we want to see a lower high followed by a lower low into our extreme supply. We then want to see a break of structure to the upside. So we break structure to the upside followed by a small correction. We can then place a long trade safely to the upside. Okay, so we want to see price come into our point of interest. We want to see a shift, a break of structure to the upside. That's this point here. Once we see the break, we can then look for an entry based on 50%, a 50% retracement of this last down leg. And don't worry guys, I'm going to show you exactly what I mean in a moment. Okay, so that's our entry schematic, and let's drop this down to the lower time frame. Okay, so this is now the 1-minute time frame. Okay, and we're looking for price to come back into our point of interest. Okay, so let's play price on, and what can we see here? So let's zoom in guys, so you can get a good picture here. Okay, so looking at market structure, we have a low in the market, followed by a lower high, followed by a lower low. Okay, and yes, this is just slightly a lower low, but it is definitely a lower low as such. So let's mark this on. So you can see here our structure. So we have a low, a lower high, followed by a lower low. Okay, so this is what we call a run on liquidity. Okay, so we've just ran these stops to the downside. We've run that liquidity, and then what do we see? We see a strong break to the upside. And how is this strong? just like before, you can see there's strong bullish momentum to the upside. So we've seen a break of structure to the upside. Second. So we've seen a break of structure. Let's mark that on. So that's a BOS to the upside. Once we've seen a break of structure to the upside, we then want to see a retracement to around 50% of them orders. So we want to see price come back. So we've seen the break. We then want to see price come back in to 50% here. We can then look for a long trade with a safe stop below the low. Okay, so the trend on the 1 minute is now shifted. It's shifted to a bullish trend. Okay, we've broke structure. We then have our new guarded low, so price should come back in here. We shouldn't break below these lows if we are going to continue to the upside. Okay, so this is where I placed a buy limit just above the 50% retracement of this down move here. Okay, so remember this black line here is just a 50% retracement from the high down to the low here, and that's where we're going to be looking for an entry. Stop loss a couple pips below. So 2.4 pips down to the low, 3.4, 4.4 pips. That's a safe stop. It gives the trade quite a bit of breathing room just in case price does want to come down, break these low, mess around a little bit, and then ultimately travel in our direction. Okay, so let's play this on a little bit. In terms of targets, where are we going to be targeting? We're going to be targeting equal highs for our upside liquidity. Okay, so we can mark that on here. This is going to be a first target here. So let's stretch off our tool here, and you can see that's around a 3.5 risk to reward up until the high. Okay, and of course this is a trend following strategy, so we're going to look for a further continuation. So let's play this on. Okay, you can see here we get triggered into this trade around here. You can then see price started to mess around a little bit, but we still never broke below the low. Okay, we never closed below. Okay, so you've broke to the upside, entry, 50% of this down move. We're then looking for a continuation. So let's play this on. Okay, and then you can see here a 3.5 risk to reward was smashed there on USD CAD. And then of course this is a trend following strategy, so you're going to look for some more continuation to the upside. Okay, so if we play this on a little bit, you can see ultimately price did go on to reach around a 5 RR on this trade. So if you risked 1% on this trade, you had a potential to make 5%. Okay, so just to recap, this is the 3-step process that I always follow with my trend following strategy when incorporating the confluences of smart money concepts. So number 1 is directional bias. We want to see a break of structure to indicate direction. Number 2 is point of entry, which is here. This is our extreme supply. We understand a point of entry where we're looking to get in and out of the trades, and then our entry schematic. So that is on the lower time frame. What do we want to see? We want to see a shift from sell bias to buy bias. We see that break of structure, entry, 50% of that downwards leg here. We can then look for that long trade. Okay, so very, very simple. If you guys did enjoy this video, please like, comment, and subscribe, and I'll see you guys in the next one. Thank you very much.